Chief Investment Officer at Bajaj Finserv Asset Management, joining us on the show right now. Nimesh, hi, good to be speaking with you. Thanks so much for making time for us. To begin with, what do you make of the market mood? Because it's getting a lot more sideways. Do you expect that to be the nature of the market for the next 6 to 12 months, given the massive run that we have seen in the markets over the last 24 months?
Hi, good afternoon, and happy to be on your show. So if we look at in terms of fundamental basis or valuation basis, the Nifty is close to its fair value. So we calculate the intrinsic value of the Nifty index, and we find that it is close to the fair value levels. However, we still find that a lot of behavioral indicators are pointing towards a bullish sign. So possibly Nifty is moving upward from here, and it's a good time to accumulate in this correction. As far as small caps and mid caps are concerned, or the broader market is concerned, there are a lot of pockets which have become overvalued. So we believe that in terms of risk reward, the large caps today hold more value than mid caps and small caps. And in terms of, say, style, we prefer quality. And in terms of sectors, we are drifting towards sectors which have visibility of growth and rather than cyclicality.
So as you were mentioning that there are few sectors of, there are few pockets of few sectors which appear to be very undervalued. Could you just tell us which sectors appear to be undervalued and which are the sectors which are overvalued as per your estimates?
So while it is difficult to generalize within market cap categories, I still feel that a lot of money that was chasing small caps and mid caps now have created a higher valuation in many of the pockets of these segments of mid caps and small caps. And within that, themes like defense, capex have seen a sharp up move in the last year, and those seem to be moving or already in the higher valuation or overvaluation zone. If you look at the sectors which have missed out on the rally, say BFSI is one large sector which has missed out on the rally, that looks very attractively poised. And however, we may see still some triggers a little far away than near term for some of these companies. We prefer companies where growth is visible. We don't see any significant downgrades in earnings like, say, consumer staples, pharmaceuticals. These are pockets where there are interesting value propositions considering the quality and the visibility of growth in these sectors.
Of late, we have seen quite a bit correction when it comes to the markets, and one of the major reasons behind that was foreign funds shifting from India to China. But do you see that as a tactical play, or do you see that as something that that could be a long-term thing going forward? That more funds could move out from India to China? Is it just a tactical buy right now, China, and going forward we could see more funds coming into India?
So, in my opinion, this is more tactical than structural. So, structurally, India still is a better story than China. However, what I've been hearing from the street in the last 2 weeks is that a lot of funds were underweight China and severely underweight global funds. And because of the stimulus announcements and the move that Chinese markets have given, a lot of this money is shifting to chase this kind of a underweight, or at least reallocate some of the money from other Asian markets or emerging markets towards China. India, a lot of people have been saying that India's valuations were a bit of a hurdle to increase allocation to India. So probably some funding was done from reducing India weight and moving into China. But if you look at the longer term structural story in terms of demographics, in terms of corporate earnings growth, in terms of say so many different sectors contributing to the corporate profit pool, India is much better placed than China. And so this move seems to be more tactical or for a few months rather than on the next few years.
Focusing on the domestic market currently, earnings are already ongoing. A few of the IT companies have come out, few of the auto companies have come out. How have the earnings so far been compared to what you're estimating is? And overall, we are expecting the EPS growth to be the lowest in the last 17 quarters. How should one read into it?
So some of it was expected. See, last 2 years, we've seen fantastic earnings growth. So there is a high base. Second, where the top line growth of some of these BSE 500 companies was growing in high single digits, the bottom line was growing at, say, 15%, 20%, 25%. Now, there was some kind of, say, normalization or some kind of convergence here expected that we would see profit growth being now close to the revenue growth. So it was expected that we would see some kind of slowdown in earnings growth in the next couple of quarters. Here, again, after the market rally, you have to be a little more selective rather than just paint everything in one broad brush. So as I said, there are value pockets available where, say, numbers are looking better than what was expected. Say, for example, the banking and the financial services side. You saw some of the banks and insurance companies coming out with very good numbers. There are obviously other areas where there could be some disappointment because of some cyclical headwinds coming in those sectors or expectations being too high. Like IT, for example, is seeing a slower growth, and majority of the numbers were a bit somber and the outlook was also a bit moderated there. So you will see this kind of move when markets are close to fair valuation. So small news will create big moves, but doesn't mean that everything is priced in. And hence, you have to be more selective today in picking stocks and sectors than earlier.
Oh, well, yes, and the market moves have been exaggerated even on the downside. So clearly the market mood is to punish the not so great performance, whether it's the case of Bajaj Auto, whether it's with Manappuram Finance or the CGDs, which are coming under pressure today. But Nimesh, I wanted to ask you a bigger thematic question of sorts, and that is, how do you deal with the policy-related uncertainty as far as RBI action is concerned, let's say on a Manappuram, or this APM allocation being cut down when it comes to CGDs? How does an investor navigate through all of this?
So obviously, whenever you're investing in a sector which it has a certain kind of regulations to adhere to for companies, there is also constant messaging from regulators about what they are thinking about these sectors. I think the governor in his last speech was quite clear about what he's expecting from the NBFC sector and what kind of work that RBI is doing for development as well as regulation of these sectors. So we have to keep that into mind, and obviously we have to take these in stride. We are currently not invested in some of the companies that you mentioned, but whenever we look at an overall sector which has certain regulations and the regulator may not be very, say, is planning some changes, so we have to take that into cognizant when take that into numbers when we are forecasting them.
Is there a way that, what you're suggesting is just stay away from the sectors which have a lot of regulatory risk? Is that how you look at your portfolio?
Absolutely not. Absolutely not. It is definitely you have to be invested in these sectors, but you have to consider any changes in these regulations when you're making a forecast. You have to create scenarios about what can possibly happen and where the regulator may turn out to be worried and may take some action. So you have to take care of those.
Okay, fair enough. So just have all the scenarios ready and be prepared as to what the outcomes could be. But just wanted to get a better sense from you on autos as well. That's gone through a bit of a correction this last couple of weeks. There is that chatter of discounting being high. The father guest told us that the discounting is 2 to 3x of what we saw last year, and that's because the inventory are at record high levels. What should one do with the auto sector right now? Buy this dip or stay away?
So I think we've just seen some initial commentaries coming for the auto sector from some of the majors. Like, for example, in passenger vehicles, especially in the SUV segment, we are seeing some positive news. So there was a large SUV maker who announced that on the first day that they launched a new version of an SUV, they got huge number of bookings on that. Within the auto sector, we create trends or based on consumer behavior, what is doing well and what is not doing well. Too early to call that in the entire sector, the festive season may not be good because some may actually still do better than the others. So again, based on mega trends within the sector, look at selective players there is what we've been trying to do.
Nimesh, on that note, we'll let you go. Thanks so much for making time and speaking with us about your market views.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits and then break right through them, become something more. It's my time to rise.